There we go. This presentation is being recorded. If you do not wish to participate in a recorded call, please disconnect yourself at this time. Welcome to today's presentation, Looking for a Life Raft, Part 2, Business Gone Overboard, presented by Precision Tax, Omnia HR, and yours truly, Advanced Benefits. Now, I'm your host and moderator, Arwen with Advanced Benefits, and today we're very excited to take you through this presentation. And as you have questions during the presentation, please utilize the chat function. We will have a Q&A period at the end of the call where we will address any questions that may not have been answered during the course of the presentation. The presentation today is a courtesy service to our clients and our friends, and it is designed only to give general information on the developments actually covered. It is not intended to be a comprehensive summary of recent developments in the law, treat exhaustively all the subjects covered, provide legal advice, or render a legal opinion. Now, Precision Tax, Advanced Benefits, Omni HR, and its employees, very important, are not attorneys and are not responsible for any legal advice. To fully understand how this information or any legal or compliance information that we talk about today affects your unique situation, you should check with a qualified attorney. Okay, that's my little spiel to make sure we cover our bases. So let's go ahead and jump right in. So I'm very excited to be joined today by three lovely ladies who really truly are experts in their field that are on today's call. We have Miss Melissa Miller on the call with us here today, as well as Miss Ariel Scott from Precision Tax. And they're going to talk about us today about taxes and representation. They've got a lot of really great information for us today. And we also have Miss Carrie Straw with Omnia HR. So I'm very excited to be joined by these ladies today. And we're going to review some really great information for you guys today. So today we're going to cover a lot of ground, so buckle up, and because it's going to be an exciting whirlwind hour. We're going to talk about the payroll taxes and collection, as well as I didn't know about revenue officers until I was putting this slide deck together. So we're off to a great start. I already learned something new, and the different outcomes for businesses that find themselves in that kind of situation. We're also going to cover different audits that you might experience through the various agencies that like to have their fingers in everything, such as the Department of Labor, the EEOC. We're going to talk about I-9 audits, failure to file various reporting, and some new reporting that's on the horizon. So without much further ado, I'm going to go in and tag in the lovely Miss Melissa Miller, as well as Miss Ariel Scott, who are going to go over the tax side of the equation here today. So ladies, go ahead and if you want to unmute, you're more than welcome to take it away. Again, I am in control of the slides, so when you're ready to move forward, just let me know, and I will scoot these slides right along. So ladies, take it away.
Good morning. Thanks, Arwen. So as Arwen mentioned, both Melissa and myself, we work at Precision Tax. I've been here just shy of 10 years, and our passion and what we do is really just helping taxpayers who have found themselves in distress. And so what we're going to talk about today is just really interactions with the IRS. So Arwen, can we have the next slide, please? And so when we talk about the IRS, for us, it's a day-to-day interaction, but in most circles, we know that the IRS is really just kind of a dirty word. It's rare that I encounter anyone who is a huge fan and is singing their praises. We tend to hear a lot of colorful language associated with interactions with the IRS, and just an adventure in dealing with them. Pretty much everyone has a story. I can't think of anyone that I interact with that hasn't at some point had at least one phone call to the IRS, which, it can be daunting to spend hours on hold and to interact with people who are not always the most equipped in their job. So when it becomes serious and it's pressing, it only escalates the stress there. So our goal today is just to kind of give you some tips, or really just some feedback about how to avoid becoming someone who has to have regular interactions with the IRS, and maybe one of those people who is using that colorful language in describing the IRS outside of, man, I have to file my taxes this year. So can we have the next slide, please? The focus today is on payroll taxes. And so we're just going to touch on what are payroll taxes? Why are they important? And then why is the IRS so aggressive in collecting on those taxes? So next slide. Payroll taxes are important. And, if you've ever had a job, you are in some capacity familiar with payroll taxes. But as a business owner, the other side becomes your responsibility. So when we talk about an employee portion, employees pay their share of their taxes, meaning their portion of the federal, the state, and local taxes. And as an employee, we are in control of how much of those taxes are taken out of our paycheck for those types of taxes. Now, Social Security and Medicare is a fixed rate. It's at 7.65%, and that comes out regardless of where you set your W-4. So an employee essentially is saying, this is what I would like to have withheld from my paycheck based on my filing status, the number of dependents I claim, or based on my income levels. So you can raise or lower that. And so that is a portion that's essentially attributed to both the employee who pays half and the employer who pays the other half. And so same for the employer. They pay a portion of the federal, state, and local taxes for each employee that they have, as well as the additional 7.65% of the taxes that are owed. And so there is a portion of those taxes that it's important to note that the employer is in charge of remitting. So the employee has the taxes withheld from their paycheck by their employer, and it's held in trust. So the employer is always responsible for the remittance of the payment of both the portion they're responsible for paying and for the portion that the employee is responsible for paying. So can we go to the next slide, please? So when a employee files a tax return at the end of the year, they are filing, and in most people's cases, they're filing to claim a refund. And so when we talk about that amount of money that the employer and the employee have set aside for taxes, and then the employer has sent into them, the portion that is from the employee is called a trust fund tax, because as I've mentioned earlier, the employee trusts that their employer will send that in. And so the issues that we run into for companies when they become delinquent in paying their payroll taxes occurs in different layers. One, the employer is now delinquent in paying the taxes. They just didn't make the payment. But also, they have then, in the eyes of the IRS, committed a theft because they have taken the funds that someone else has trusted to them and said, this is earmarked, this needs to be sent to the IRS on my behalf, and they have not done that. And so when we talk about why these types of taxes are escalated, why they are collected on with an increased focus, it's because what was entrusted to the business or to the employer never went to the IRS. And you can see the disconnect because the IRS will then honor, if I'm the employee and Melissa's the employer, and Melissa doesn't send my taxes in that I've paid, but I submit my tax return claiming those taxes that I've given in trust, not only was the IRS not paid those taxes, but they will issue me the refund that I'm due based on the credit that I have for those taxes. So it's like a double dip in that system. They didn't get paid, but those funds also are then issued out to the employee. And so you can see how that starts to snowball and escalate in the eyes of the IRS. The other factor that is important to consider is that when a company doesn't pay their payroll taxes, the IRS views it as creating a competitive advantage. So let's say, again, Melissa and I are businesses operating in the same field. We both have employees and we're bidding on the same jobs. And I'm not paying my taxes, but Melissa is. Melissa's profit margins will be very different. So she may be able to bid jobs, but she has to bid them at a higher cost because she's calculating for the fact that she's paying her taxes for her employees, federal and local and state taxes and their portion. But when I'm not paying those, I can bid jobs lower. And in the eyes of the IRS, they don't feel that that puts us on equal footing. And so they, from a standpoint of why do they get so aggressive about this? It's one, there's a theft. Two, you're not paying something, but also then you're gaining a benefit against your competitors in a market that's already tight. Can we go on to the next slide, please? So when we talk about the United States government and why we pay taxes, the budget is a huge portion of what they do. Income taxes fund a portion of the budget. And so when we look at this big scale of outlays and people aren't paying their taxes and the government is actually paying refunds out for funds that they haven't received, you hear a lot in the news that the IRS is more active. They're trying to do things to get people to pay their taxes. This is why, because all of these resources and these big slices of the pie are not being appropriately funded when taxes are not being paid. And then we can go to the next slide as well. So when we talk about taxes in general and when you owe taxes, and we've already talked about why payroll taxes are collected upon more aggressively than any other tax. And I'll give you an example. I have clients with personal liabilities of, let's say, $775,000 on their personal debt from taxes that they didn't pay when they filed their returns. The IRS doesn't collect on them as aggressively as they do on a business who owes just over $25,000. They are looking at these payroll taxes as their number one priority in terms of collections. And so when we talk about payroll tax debt, up to $25,000 can be handled in an installment agreement that's set up through ACS, which is just an acronym that the IRS uses for an automated collection system. You call in, you deal with a very entry-level agent, they set you up on a payment plan, and A, B, and C, you're in a 24-month installment agreement, no problem. You're catching up, you caught the problem early, you're doing what you need to do to take care of it. Everyone makes mistakes, and that's how they view it. You're taking that proactive action. But as soon as your balance climbs over $25,000 that is owed in payroll taxes, then it gets escalated. And at that point, we're dealing with a revenue officer. And a revenue officer is essentially just a targeted agent, an individual who's assigned to a case that gives each case a very thorough look through and is assigned just to that business. And when we talk about that, you no longer have the option to just pay that off in so many months. The revenue officer is going to do a full financial on the business and dig into what you have the ability to pay. And so Melissa's going to talk more about when a revenue officer is assigned, what does that look like?
Thank you, Ariel. As Ariel stated, a revenue officer isn't an individual collection agent. They are the most aggressive form of collection action that the IRS has. So I would suggest avoiding having one assigned at all costs. And part of that is paying the payroll taxes. Revenue officers can also be assigned for personal liability and also other business liability. The only thing we know for sure is that one will be assigned if you owe over $25,000 in payroll taxes. The collection agent or the revenue officer is going to collect a full financial, as Ariel said. They're going to do a deep dive, and their goal is to collect as much tax as they can up front. That includes liquidating any assets that the business may have, including bank accounts and real estate, other assets of the business that may be quick to give them a lump sum payment towards this liability. Next slide, please. If you're unresponsive to a revenue officer and just think that they're going to go away, they have a lot of tools in their tool belts to collect. The first one is a bank levy. They will use whatever public information that they have or information from your tax returns to locate your bank, and they can freeze funds in that account. If it's not released in 21 days, those funds that may be used to make your payroll or pay your other business liabilities will be forwarded to the IRS to help pay down your tax debt. They can also contact your vendors, and that levy is at 100%. So any services that you have done, you've been waiting for payment for, to pay your business liabilities, they can take 100% of that as well and send that to the IRS. The IRS will also file liens. So they will make sure that any assets that you have cannot be sold without giving them the funds that they can gather to help pay down your liability. Revenue officers not only look at the business to pay back this liability, but they also look at responsible people. So they'll look at who was responsible to make these payroll taxes, who was a signer on the bank account, and they'll hold a trust fund interview. During that interview, it could be the person that was the payroll, the office person that may have signed checks on the bank account and didn't pay the debt. They can be held liable as a liable person and personally be responsible for a portion of that debt. Next slide, please. I'm going to give you an example of a client that I've worked with, and this is kind of his story. We're going to call him Mr. Green. Mr. Green owned a landscape company. He was a C corporation in the state of Idaho, and he bought the business from his brother and his sister-in-law. He had worked for them for many years, but he had never been a business owner. He knew that he had no business taking care of taxes or payroll or even paying the business expenses. So rather than hiring a bookkeeper to help him with these services, his sister stepped in and said, "Hey, I'll take care of that for you. Go ahead, put the trust in me. I'll get it done. You go work the business." And that's what Mr. Green did for years. He assumed that all of his returns had been filed. He thought he was paying his federal tax deposits. But Mr. Green never checked to make sure that those things were happening. And because he has to show that he has demonstrated care and prudence regarding his business, that's what the IRS requires, he ended up with a very large tax bill. 8 years into his business ownership, a revenue officer showed up at his door because he had no filed tax returns. Mr. Green was responsible in 30 days for providing copies of those tax returns, paying back the liability, in addition to the penalties and interest, which were almost equal to the payroll taxes that he would have paid. So that was a big ouch. Next slide, please. Perfect. So the IRS had already begun the task of filing returns on his behalf. And how they do that is they will look and see if there were any W-2s on file, and they had filed their W-2s. If they can't get the information for payroll expenses there, they can summons the bank accounts and determine what you've been paying or what the business has been paying in payroll. And then they will go ahead and file tax returns based on that information. Mr. Green met his deadline. He provided all of his information. He had to disclose any assets the business had. He suffered with the penalties and interest, and the trust fund penalty interview was conducted. Although Mr. Green's sister had agreed to pay all the payroll taxes and didn't do it, and agreed to file all the tax returns and didn't do it, she was not held responsible because she was not a signer on the account. So she didn't have the responsibility of deciding who gets paid each month. And the IRS, in their eyes, they should be the number one creditor. Next slide, please. So trust fund penalties could have been assessed to Mr. Green personally, but not only that, Mr. Green lived in Idaho and we're a community property state. So the IRS also began to look at his spouse and her assets and her 401k. That caused a lot of issues, as you can imagine. Next slide, please. So what happened to Mr. Green? Well, Mr. Green was very fortunate because he still had the money to pay the payroll taxes in the bank account. It just never got submitted. So he was able to pay the trust fund portion of the liability, $120,000, but he was still had this large liability from the penalties and interest that was left over. The financial statements show that the business had $4,500 left each month. That was the business's income. And that entire amount was required to be paid over to the IRS each month until the balance was paid in full. He ended up on an 18-month payment plan, and liens were filed against the business to secure the government's interest in any assets that they may have had. After that, Mr. Green went ahead and hired us to conduct his payroll and do his bookkeeping services in the future. And so I guess the lesson here is, had he done that in the beginning, hired a bookkeeping company, not necessarily us, but any bookkeeping company or professional to do these services, he would have saved himself penalties, interest, and the cost of representation. Turn that over to you.
Yeah, and we like this quote. It works really well because we work with a lot of business owners. So business opportunities are like buses. There's always another one coming. And so when we have clients that are coming on board with us, our goal is to get them in a position where they're not focused on the administrative side of things. It's important, but partnering with people who can help make that easier allows you to focus essentially on the next bus that's coming. That's your passion. That's what drives you to do the work, are those business opportunities. And so you can go to the final slide, Arvin. We just really like that idea that when you know that running a business is already difficult enough, and there are many things that demand your time and your attention, we don't want the fact that you owe a lot of taxes to be the thing that you're focused on. We would rather have you pay your taxes on time, understand where those funds are going and coming. And so to us, and obviously we have a view on this because we see the hard side of things when things do go wrong. It's essential that your bookkeeping and your accounting are in order. And if it's not your area of expertise, or it's not something like us who are passionate about it, we get together and we talk about work and numbers, and our significant others are like, let's talk about something else. But we're passionate about it. We get excited about these things, and partnering with and helping people really gives us that sense of purpose because we're helping them. And so that's the important thing, is to find people who are qualified to help you navigate what can feel like shark infested waters. We want, and that's our heart, for people to find those relationships that help them focus on what they're good at. And if I've learned nothing in the last 10 years, my clients are amazing at what they do. Sometimes just math isn't their passion, or just bookkeeping isn't their passion, and it is ours, and we know it is other people's. So it's finding those good connections, and that's everything.
Awesome. Thanks so much, ladies. I love it. Just going through this information, I can see so many different places where, even in my own experience, where I'm like, oh, that would have been helpful for me to know 10 years ago, and things like that. For those of you that aren't aware, my husband owns his own business, and that was when he's like, I'm going to go into business for myself. My number one rule was, you have to hire a bookkeeper and a CPA, because if you don't hire a CPA and a bookkeeper, I'm not on board.
Yeah.
And so I'm so grateful that he took that to heart and was like, okay, yes, I will do this. I guess one question that I had is, we hear auditors a lot, like, oh, an auditor. Is there a difference between an auditor and a revenue officer, or is a revenue officer just a type of auditor at the IRS level?
So they're definitely different. So auditors are looking for accuracy of tax returns, and more often than not, an auditor is referred to as a revenue agent. And their training and their background is in tax preparation, and then looking for anomalies. So every business has an industry that they fall in line with. So when expenses or income is outside of the norm, that's a big red flag to them. What happened in this year? What are we looking at here? Where revenue officers are essentially a high-level collection agent. They aren't necessarily trained to focus on the accuracy of returns or the information that's provided there. They're looking more at the financial end of things, looking at bank statements and financial records. Great question.
That helps a lot. When it comes to a revenue officer, let's say, I, like Mr. Green, right? I end up with a revenue officer knocking on my door. First of all, I know on the HR side, we get a lot of audits are preceded by letters of, hey, you're going to receive, like, we're going to come knocking on your door. Do you get any kind of heads up, or do they just show up randomly?
It can happen either way. Sometimes you will get notices in the mail, and when you don't respond, that's when they knock on your door. Now that we've gotten past this abnormal period where nobody was showing up on other people's doorsteps, we're seeing them back in the field again. So that could be your initial contact or a business card in your door if you're not there.
Scary. No, and then at the beginning when you said, oh, the IRS, not a lot of people think of it, very well. When you say IRS, my favorite movie in the whole world is Stranger Than Fiction, where Will Ferrell plays an IRS agent. And so when you say IRS, that's my first image, is this beautiful love story between Will Ferrell and Maggie Gyllenhaal. And I'm like, oh, that's not how real life works.
You're lucky.
I know. Wonderful. And then just out of curiosity, when it comes to, and I'm trying to articulate this in a way that'll make sense, in the HR world, right? And in the world we're accustomed to, when a business finds themselves overboard, in rocky seas, so to speak, and they reach out to a company to help them navigate things like audits or, just, being in trouble, a lot of times, right, an organization at the end of the day can never fully transfer the risk, right? They always have that risk. They always have that responsibility. So when they engage, when a revenue officer is knocking on their door, are they able to engage with, you guys at Precision Tax, just as an example? Are they able to say, hey, I'm working with, this third party, please interface with them? Or are you guys coaching employers on like, okay, here's what that next step, what does that look and feel like from an employer standpoint to engage with you guys?
So we get power of attorney. And so all of our team actually handles all the interaction with the revenue officer. And so in some instances, our clients will attend hearings or meetings alongside us, or a conference, call them in. But the vast majority of the communication we're handling on their behalf. And so it's kind of a two-pronged approach. We talk extensively with our clients and gather information, and everything we present to a revenue officer is essentially creating a financial narrative. Here are the books, here are the expenses. The clearer we can make that essentially story out of numbers, the better. And so there are times where it's necessary, but we really take that interaction with the revenue officer out for our clients so that they have that peace of mind. Nobody likes sitting in the room with the IRS agent. And so for them to not have to be able to do that, I think that's a huge peace of mind. And for them to be successful, and for any business owner to be successful, we're huge proponents of document everything, every receipt, every expense, like every mileage log. And to the point where I have truckers who they're on the road all the time and they're like, how do I do this? Just take a picture with your phone and email it to yourself every time. And then you create that track record, you create that habit, and you may not need every receipt that you take a picture of, but I would rather you have too much information than not enough.
Perfect. I'm glad that my question came through, because that's exactly what I was trying to ask, but I'm like, I don't know how to get there quite exactly. Have there ever been instances where, and again, at the beginning I said, hey, we're not lawyers, this isn't legal opinions, but have you guys ever had to recommend to a client, like Mr. Green's situation, right, where the sister did him dirty and didn't do her responsibilities? Now, obviously, families very, very sticky, but have you guys had instances where you've had to tell a client like, hey, there's some negligence, or you worked with a bookkeeper, maybe a previous bookkeeper before they came to you that didn't do their job? And, have you ever had to advise a client that, hey, there's some legal ramifications here that you should pursue with that negligent party?
It does happen from time to time, and those are really hard conversations, but it's usually with a recommendation that they talk to local counsel and see what ramifications they have at that point. But again, it's a difficult situation. We hope that that's never the case, but it does happen from time to time.
Yeah. And always our primary focus is that may happen. You may have to go through civil proceedings or bring charges against another party. But that doesn't resolve the problem now. We need to get you into either a repayment plan, into a status that keeps you safe, or what can we do about these things in the immediacy, and then pursuing those other actions against someone civilly. But until that's handled and you have that money in hand to either repay yourself or the government, you have to do something about your problem now. It doesn't sit on the back burner while you take those actions.
It's not like you can tell a revenue officer, hang on, I'm gonna sue them and I'll pay you once that. It's like, no, that can take years. Like we got time, we don't
Yeah.
have that. Awesome. And then I think lastly, if for those employers and executives and HR professionals that are kind of wondering, and this is something we've come up with a lot of, how do I know, how do I identify if I'm at risk? Well, what recommendations would you ladies make to an organization to be able to identify proactively if that's something that they are at risk for?
As long as they're making their tax deposits and filing their returns timely, they're not at risk. They shouldn't be at risk. And just, you can log in online and take a look at your account and see those numbers, making sure that you are always educated about where your business stands and that the IRS has received your returns and ensuring that those deposits have been posted properly. Those are steps that you can take to make sure that you're not at risk in the future.
Yeah. I'm terrible at remembering things anymore these days. I have my schedule, I have my family schedule, I have work schedules, and I have everybody else's schedules. And so as a business owner, using your calendar to set reminders for the things that you would actively avoid. And so one of the things for a lot of business owners that I work with is they don't want to handle the payroll. They don't want to look at it. So if you put on your calendar 2 weeks after your payroll deposits are made to log in and check, you can check on your bank account to make sure those funds were paid out, but then also checking your IRS account to make sure they were received. Doing that 10-minute checks and balance gives you that peace of mind that whoever you've entrusted that to has happened. And if you don't see that, that is an immediate red flag. That gets a full hours of attention right there. Why weren't these things done? Was it my fault? Did I forget to sign the return? Did I not respond to an email? Or was there a disconnect in that communication? But if the answer to those things is no, it allows you in the immediacy to take action to say, I need to find someone else, or we need to have a conversation about why these things that I know are essential are not happening.
Perfect. And my last question, ladies, is does somebody already have to be working with Precision Tax, like for the bookkeeping side? And then, if they find out they're in hot water, or if they're in the middle of hot water, can they come to you guys with the mess and say, help? What does that look like?
That's our specialty, the help. No, in the middle of any crisis or situation, that's what we're here for. So we encourage anybody to reach out to us, even if they just have questions.
That's for sure. And all our departments work independently. So if you just need bookkeeping, fantastic. We offer just bookkeeping or tax preparation, and then the resolution side of things. So we work very collaboratively when there's a need, but our goal, our long-term plan for all of our clients is if they come to us for resolution, the hope is someday they just want to use us for bookkeeping or just for tax preparation, because we want to have set you up for long-term success through the coaching through that side, so that you're comfortable. We're not going anywhere. I still have clients who call me from my first year here that we talk about tomatoes and the things going on with our kids. But the other side of it is I just send them to tax prep each year, and they are here because of those steps that we've put in place for them to run their business. And now it's just clockwork. It's one more thing that you do on a time cycle.
Awesome. Wonderful. Well, thank you so much, ladies. I really appreciate. Oh, look, I had a question slide. That's okay. We got there. Questions. But I super appreciate your guys' insight and knowledge and expertise. And I get it when you guys were saying we're passionate about taxes. That doesn't sound weird because we're passionate about insurance and HR. So to each their own. All righty. Well, I'm going to go ahead and introduce and turn it over to the second half of today's presentation to Miss Carrie Straw, our VP of HR Services. And Miss Carrie is going to talk about today, what does it look like? You've got your tax and your bookkeeping side, but then you've got your whole HR compliance side. And you have so many agencies to deal with on that side. So Carrie, go ahead and take it away.
Thank you, Arwen. So yeah, the IRS scares me too. And I'm glad I'm not the entrepreneur, because muddling through that, I remember taking my degrees in college and going HR, but took some accounting classes. And when I got to payroll taxes, like, nope, not my thing. not the path I'm going down. So kudos to you guys. I know that's amazing work that you do to keep the IRS at bay and make sure people are taken care of. So let's get into talking about what else can happen in the HR world. So things happen all the time where something triggers something, an employee makes a complaint of some kind, and all of a sudden we have a different agency knocking at the door. And so we wanted to talk about what are the top things we usually see maybe land you with somebody knocking on your door, getting that letter says we're visiting you or we want to view these things from you. So the first one is Department of Labor audits. Those are ones that can go either financial or more performance of the company. And I'm not going to talk on the financial part of it because that's outside our realm. Really, I'm going to talk about the performance audits, the business portion of that. So really, they're looking at different things of the company. So when we start saying, are you ready for a Department of Labor audit or a DOL audit? Are you ready? When's the last time you've actually done an HR audit to see you're in compliance? Because when they knock on your door, what are they looking for? So some of the things they're going to be looking for in that DOL audit is, one is your Fair Labor Standard Act of LSA classification. How do you have your people? Exempt, not exempt? Do you have 1099 people that come work for you? They're going to be looking at all of that. So it's important that you look at how did we determine who is exempt or who's non-exempt from those laws, especially from overtime. So that's making sure you have really strong job descriptions. You've done the testing for the classification, that you have everybody correct, because it's okay to have more people non-exempt that could be exempt than having them exempt and should be non-exempt. So that's what Department of Labor is looking for, is to make sure you're paying your employees correctly and they're receiving the overtime if they're entitled to it, based on things such as salary testing. We know different states have the federal salary testing, but if we go across the border over to Washington state, there's a whole different level of salary testing that continues to rise each year. I think it's in the 60,000 range for this year right now, that if you don't make that much money, regardless of meeting all of the duties test and everything that you do for that classification, you should not be an exempt employee. And so they're going to be looking to see how you made that determination in the records. Next thing they're going to be pulling is probably employee records, seeing how you have everything in there. What is in that personnel file? Do you have things in a medical file that are separated out? They're also going to be looking at, which I have my slide next, we're not going there quite yet, Arwen, but I-9s, making sure they're not in there, because Department of Labor is also looking for other things. If they see I-9s in those personnel files, you may find you all of a sudden you have another agency knocking on the door wanting to do that audit. So we want to make sure we audit ourselves first and that we have everything dialed in, so that we don't create an audit that creates more audits that creates more audits. And so making sure that everything is lined out. They're also looking at things as far as, you know, do we have the appropriate documentation? Do we have good compliance docs? You know, some of the things I see when I'm doing HR audits are people are missing either premium only plan documents, which again, we talk about payroll. It's important if you're going to pre-tax benefits, you want to make sure you have a premium only plan document in place stating that you're pre-taxing and what plans you're pre-taxing, and is it an auto enrollment? Do employees have to enroll, you know, waiver options? So there's a lot that goes into those documents, so making sure you have them in place, because if you set up benefits and then just tell your payroll company pre-tax these without that document, you could find you were pre-taxing illegally. You didn't have the right plan documents in place. Other things I find when I'm helping doing those audits are summary plan documents for benefits. We have things called WRAP documents, W-R-A-P. Those come at ERISA, which is Employment Retirement Income Security Act. So ERISA oversees retirement plans or health and welfare benefit plans. They're looking for certain compliance documents, and one of them being the WRAP document. That's where you take all of your carrier's benefit books and you wrap it with a document that states what are our contributions and what are the waiting periods, and is it grandfather, non-grandfather? There's a lot that goes into creating the ERISA compliance documents. And then of course, if you're self-funding any plans, if you're doing a flexible spending accounts or health reimbursement arrangements, those require their own plan documents as well. And then are they current? So sometimes I find where I'm looking at a WRAP document and I'm looking and it says one insurance carrier, but that was their insurance carrier 3 years ago. They forgot to do a summary of material modification that says, if it says this carrier in here, as of this date, we now mean this carrier. And then sometimes it's expired. If you do have a change and you did a summary material modification, that is only good for 5 years from the date that that WRAP document was stated. You need to restate that document. And so a lot of things go in there to looking at how are we performing as a company. And then they're going to be looking at sort of reportings that you're doing. Okay, did you do your Form 5500 reporting? That's more for large groups. So if you haven't heard that before and you're under 100 employees on your plan, you're okay. You don't have that requirement for your benefit plans, but they're really going to pick through to see how are you doing things? Are you complying? Are your policies all in place? Are you administering those correctly? And so when DOL knocks on the door or sends you that letter, you want to make sure you've had everything already done. Because if you get that letter and you realize you didn't have the POP document or the WRAP document, you're too late. Those documents don't get backdated. So you may be facing things like penalties, and all of the pre-tax that business got may go away, and you may have to pay those taxes back to the government. So a lot goes into making sure that you're prepared on how you do things. And again, I can't stress enough that just doing a simple HR audit, walking through and making sure that you have all of your ducks in a row and identifying, maybe I don't have something, let's fix it now. Because if you fix it now and you get, your audit years later and it's already fixed, sometimes there's a little bit of forgiveness the government does. And we'll talk about that when we talk about I-9 audits as well, is you took the actions to correct it before we knocked on your door. They're less likely to be like, here's your penalties. And I've had places go through audits where audits have come in and the employer self-corrected, before the audit even occurred, even though they didn't have everything, the auditor was a little more lenient on that company because they did make the effort, and it took away the effort that the auditor had to make to find everything that was non-compliance. So Aaron, let's go ahead and hit next slide. All right, so we also want to talk about what happens when we might have an employee that sees we've done something wrong. So we know we have employment EEOC, that is our Equal Employment Opportunity Commission, and we have EEO, which is just the law that oversees that. So some states will go right to there. So if you let somebody go, and I worry about the at will word that gets thrown around, because if you at will somebody, and let's just say, I don't do good with conflict, maybe. I don't want to tell them that they're just doing horrible at their job. I just want them to go away because they're a problem for me. So I approach them the next morning, just say, hey, not working out, at will state, so we're just going to let you go. And I don't give them a reason. Well, they may make up their reason. They may make up something that's protected by Title VII, such as you're discriminating against me based on race or age or gender, or sexual orientation, whatever they're going to come up with. And they're going to file for that discrimination. You terminated me wrongfully. Even though we're an at-will state, it doesn't protect you from making sure that you're doing right terminations. And so we do have things like the Idaho Human Rights Commission. Here in Idaho, Montana has Montana Human Rights Commission. Washington, you're going to find EEO is overseeing it. So what happens if an employee says, this thing was done wrong to me by my employer, they're going to submit a claim and say, this is what I feel is wrong. I wasn't paid equally compared to the other genders. So I have gender discrimination. I was terminated because of my age, because I'm the oldest person here and they wanted me gone. So they're going to put whatever they think you terminated. So my first recommendation to avoid any of these claims that go in is to make sure that you're not just relying on at will, but give the reasons and the real reasons, not, hey, you're getting my problem, I just want you to go away. So we're eliminating your position. And then 2 weeks later, I post your position for Indeed, and I want to hire somebody else in that position. So we want to make sure we're being truthful. And if you can't be truthful, you really have to look at why can't we? Is it really something that goes against the law? And so when we start talking about where things go, great thing for Idaho and Montana, having the Human Rights Commission is that step beneath EEO. And so what our commissions do in our state is if an employee has a complaint, it has to go through the HIHRC, Idaho Human Rights Commission, meaning it's not just going to go right to the EEO. We have a buffer because a lot of times some of these claims could be misunderstanding. Employee didn't know something was happening and now we clarify it and it just goes away, or really the employer messed up. Maybe it was an educational opportunity, so mediation is going to play. But if it's really bad, like the employer is really discriminating and doing bad things, the Idaho Human Rights Commission will actually kick that up to the EEO. And so they're the first look though. So a lot of our claims, about 80% of the claims that come into Idaho Human Rights Commission gets resolved without even having an EEO involved. Unlike other states that just have EEO, everything's being cycled through there. So it really eliminates the strain from EEO and gets things done faster. So when we start looking at states that have their Human Rights Commission, it is that buffer for employers. It's our helpful part of it. And I also want to encourage you guys to check out our Idaho Human Rights Commission. In case you didn't know, they do free trainings of all sorts of stuff. And so if you reach out to them on their website, they'll come to you, your employment office, and they'll do the trainings that they offer for free on their own dime. So if you want to do an anti-harassment training for your staff, they will come on site and do those type of things for you. So I highly encourage you to check out our Idaho Human Rights Commission as a buffer to find the trainings you need, to get the resources you need. They have a whole bunch of employer resources available too, so that when you're doing that HR audit, you're also looking at, is our handbook up to date? Do we have our current trainings? What's our protection in place? You can use their resources as a guide to get some of those done too. So if you let somebody go and they go and file a discrimination lawsuit and file that complaint through the Idaho Human Rights Commission, you have more of a buffer to stand on because you've used their resources, had their people in for training, that's all documented, probably going to go a little bit easier for you. So highly encourage you to check this out, because when you get that letter saying this employee is claiming you did XYZ, that can be a very scary letter to receive, because now you're going back and figuring out how to defend ourselves, and do we need legal counsel? Best defense, HR, and I'm going to say it, document. If you have an employee that is performing poorly, or maybe their attendance policy is they're not arriving on time and you're having these conversations with them, I always tell people, document your verbal conversations, because it becomes a pattern of behavior. If I'm sitting there saying, hey, employee, your production was only at 80% today, what's going on? And I have a conversation, I want to document that, because by the time I get to 3 or 4 or 5 conversations with this employee, and then I realize it's because they're doing something that they shouldn't be doing on company time, is interfering with production, I decide to let them go, I don't have to remember all my verbal conversations. I have it documented. So all of a sudden I have a discrimination claim come in from this employee. I'm easily able to give them, here's our handbook, here's our production policy they signed, here's the 5 times that I talked to this employee, here's the 6th time where we found out that they were doing this on company time. This is why we let them go. We did not fire them due to their disability or their age or their gender or their race or whatever the employee has decided was the reason that you're letting them go. So the best thing that you can do as an employer is, no matter how minor things are that you think in your mind, just document it and get that into that personnel file. That way, if something does happen down the road, or you have leadership changes, manager leaves, a new manager comes in, and something happens, they'll be able to see, oh, this has happened before. This is not a first event. They've actually done it twice. Now we need to take it maybe into performance improvement plan or disciplinary action for this employee. So great resources. I highly encourage you to check out Idaho Human Rights Commission. Next slide, please. Okay, I-9s. This is one of those audits we don't want to be. We just don't want ICE or Homeland Security investigation. We just don't want them in our business. So unfortunately, when I go in to do audits with people and I'm like, yeah, let's go ahead and just peruse your I-9s. Give me 3 I-9s out of the stack, and they pull them out. I've never gone into a company where 100% of the I-9s have been correct. One, there's a lot of pages behind a I-9 that says, here's how to complete it. They give you all the information, but it's a lot to read and a lot to remember. So this is one of those things where I say, please take that moment to self-audit your I-9s. Lucky for us, I looked at the proposed changes, because if you haven't seen it right now, our I-9s are expired right now. It's okay. We continue to use the expired I-9s. There's so many changes that they proposed for the new I-9s. It's taking a while to get that new I-9 through the approval process. And so I'm excited, because a lot of the things that I see wrong on I-9s, page 1, when I look at an I-9, there's that other last name box. A lot of times I see that blank. But if you read instructions, it is an error to leave that box blank. If it doesn't apply to that employee, they're supposed to put an N/A for not applicable in that box in order for it to be a completed form. Other things I see on page 1 is the dates. If you look at them, they have exactly month, day, year. They're looking for 04, 05, 2023. They're looking for that whole date range. Unfortunately, if you just do 4, 2, 2, 3, or something along that line, it's an invalid date and it can be a penalty. So it's simple stuff. It's the little stuff on this form. And I often tell people, I don't know if this form is really like what it does to make sure you're legally to work here more than all the stuff that it takes to fill out the form when we're looking at how complex it is. So when in complexity, it's a lot to do, but once you just read through the directions or take some training on I-9s, it becomes much easier to understand what it is that you need to do. Also, page 1, people often forget to mark the boxes as I did not use a translator. That's a little box underneath where the employee signs that often gets overlooked from the employee. So that's just page 1, the employee's page. That page needs to be done by day 1. And so you want to make sure that that hire date and the date that they're signing it is day 1, or of course before, because sometimes people send out the offer letter, maybe they include an I-9, so it has the instructions so the employees know what to bring with them. Speaking of what to bring with them, if you read instructions, you can't tell the employee what to bring, because you don't know this employee's authorization to work in the US. And so you can't say, hey, we'll see you on day 1. Don't forget your driver's license and social security card. They may not have a social security card, and you may have discriminated against a person with a work visa because they might not have a social security card, and all of a sudden you're telling them they have to have one to work for you. So be careful in how you word your offer letters too, because what usually generates audits is, one, sometimes you're randomly picked, you're the lotto. And so they're looking at maybe people that may hire more work visas within their company. But 2, an employee complaint can also trigger these type of audits. So you want to make sure. Another thing with I-9s, no matter what pages you are on, make sure they're not in the personnel file. They talked about Department of Labor coming in and they're going to be looking at those files. Here's what we don't want to see. So Department of Labor comes in because they've had an employee complaint. They're auditing everything. They all see I-9s and personnel files. Next thing you know, you have ICE knocking on your door for their audit. Why? Because the agencies talk to each other and they said, hey, you might want to come look at those. We're seeing I-9s and personal records. So pull those I-9s out, make sure they're in their own little binder. You can have an active binder, a terminated binder. Just make sure that they're there so that you have all your active employees have an I-9 and people have terminated. You know when to destroy those I-9s, excuse me, for record keeping responsibility. So again, making sure that you do your audit on those. And then page 2, read that A or the A, or you have to have B and C, so that whole thing of sometimes I see passports written in the driver's license spot, driver's license written in where the social security card might go. They're just all over the place. They're not complete. So making sure that whoever is viewing those documentations are completing it correctly with the right language. There is an I-9 that you can find. Of course, they're expired, but there is one that has drop-down boxes. Makes it a little bit easier for the employer portion to do. By day 3, if you don't have the identifications and everything verified by day 3, day 4, they're not working for you until they provide the documentation. A lot of people get hung up too on, I can't find my social security card, or, I don't know what to do. Go down to the social security card office, order a new social security card. They'll give you a receipt. The receipt is valid until you get your social security card. So there's ways around, I've lost my documentation, to still help that employee get to work. So don't let them be worried about not being able to find it. There are options to get it done. Just make sure at some point you audit yourself. Everybody sign the forms, because sometimes in an audit, you may have to actually redo a brand new form to attach it to the form that was done incorrectly. So that's where a good I-9 audit comes into place. So again, this is one of those agencies where I have seen I-9 audits happen. I have come in to assist clients, and we've actually did self-corrections maybe 6 months before was one of them. And they came in and saw the self-corrections done. Was a breeze. Even though there was forms that were wrong previously, the fact that we had done all the corrections and got everything up to date, they were fine with that audit. So just making sure you check those too. Okay, all right, next slide. All right, so failure to file. So we want to make sure we know what we're filing, when to file, and I put a couple things up here to make sure that people understand that if you catch you forgot to do something, get it done, because there may be some relief for you even with those penalties. So Form 5500 filing is the form that's required to be filed. Well, we have our retirement plans, but I don't talk about retirement plans. I'm talking about your health and welfare benefits. So if you, for example, on January 1st, your plan renewals, and let's talk about medical, and you have 102 people on your plan January 1st. Well, because you have 100 or more people on a plan, the government's going to want you to do filing to them. The filings for Form 5500 include things like commissions from your broker, how much did you pay the carrier. They're just doing all of this back end work for you. So you have to file 7 months after the end of that plan year. So if you're a calendar year plan, by July 31st, you need to have your Form 5500 to the government. So if you realize, oh, did I ever file? They do have a voluntary program that allows you to go back and file, and then they cap those penalties. So rather than them catching you and you're writing six-figure check, you can catch it yourself and write a much smaller check for having voluntary said, I forgot to file. Now I'm doing it. Another one we want to be aware of is I still, even after the enactment of Affordable Care Act and the 1094, 1095 reporting, I still find every once in a while that we run into a business we're talking to, and they're like, oh, I've never heard of this before. And I'm like, oh, you're over 50 employees. You didn't hear of this. So again, making sure you're watching this 1094, 1095 reporting does have to do with healthcare reform. There are fines with that. The government is IRS is 2 years out right now with sending those not so nice letters called a 226J letter that says, we don't see you filed or filed correctly. So make sure that if you have 50 or more employees, that you're watching on whether or not this becomes your filing responsibility. And again, if you're like, how do I determine that? I do have a formula too, if you need to go back and do some measuring for your payroll and see how many people you've had and what time, and did you equate to what we call an applicable large employer, and applicable large employers are 50 plus that have to do this reporting. So 2022, we can see that we have, I put the kind of penalties on there, $280 per return, up to $3.4 million per business. So not doing your form filing can be very expensive. So make sure that you are watching your group size, because when you do hit 50, there's other things. There's FMLA, which is Family Medical Leave Act. So a lot of things changes as your business employees fluctuate. So just make sure you're watching what that is. All right, Arwen. Okay, so this is new, and this is something that we have been, as advanced benefits, letting everybody know. So this was passed, Consolidated Act passed this new reporting feature for prescriptions. So they're gathering a ton of prescription data from employers. So December was a hot mess of people trying to figure out what to report for years 2020 and 2021, and getting everything in for self-funded groups only. Fully insureds were being handled completely by the carriers. So really it was just self-funded people that were trying to gather the data. However, for our reporting for 2022, which is due June 1st of 2023, there's additional data that the government is collecting. And unfortunately, a lot of times the carriers may not have this data. It's premium equivalents and things like that. And so you may, if you have insurance benefits, see something come from your carrier asking for some information and a deadline. If you don't meet their deadline, they're like, hands off. It's all on you now. We're not doing any of your reporting. So make sure if you have benefits you're watching for this. It is a very detailed, cumbersome. You have to register. There's a lot that goes into there. And if you need help on this, please reach out to us, because we do offer this reporting service as well. All right. Perfect. Last thing I want to touch on that I see people forget about is our Center for Medicare Services, Medicare and Medicaid Services. There's a secondary payer filing that we must do. And a lot of times employers don't even realize they have this. So this means that when you have Medicare and group insurance, depending on the size of your group, Medicare may be primary or secondary. And so if you're below 20 employees, Medicare is primary. Over 20 employees, Medicare is secondary. And so what they want to know is, a lot of times is primary, how many people you have, but there's also the prescription component that goes into it, because Medicare individuals on group health plan can waive their Part B benefits for no penalties and pick it up later when they lose group coverage, as long as you've reported that you have creditable coverage. And so when your plan starts, you have 60 days to log into the CMS system and report your prescription drug coverage. And then you want to make sure too, before Medicare open enrollment, which is October 15th of every year, you've also provided the notice for Medicare open enrollment, which is really important. So there's a 2-component thing to this CMS filing that we do. So making sure that you are primary payer. If you're over 20, you get your notices to your employees in time, and you also do your 60-day filing from plan start date to say if you have creditable or non-creditable coverage. So a lot that goes in there. This is just like the tip of the iceberg. There's so much in HR that we do from employment perspective. But again, if you need human resource auditing done, I-9 auditing, things like that, here at Omni HR, we do assist employers on doing that exactly to make sure you're ready should one of those audits come along.
Awesome. Thanks so much, Carrie. I appreciate it. As we're going through this, I'm sitting here and I'm thinking, okay, if I'm an employer, what's worse, the IRS knocking on my door or 100 agencies that I have to keep track of? I don't know. It's just the joy of doing business. And I think the thing that's really important to note too is, especially with, social media, if I was an employer 30 years ago, I was less concerned about employee complaints and things like that than I am now, because with social media, there's whole content creators, their whole channels are dedicated to telling employees about all these different agencies and all these different ways. And I know that there's some agencies that'll actually split if there's penalties assessed, they'll split the penalties with the employee. And so there's even some financial motivation for employees to try to catch employers in a mistake. So it's scary. And it makes me feel like, okay, thank God we have people like Melissa and Ariel and Carrie that are there to help make sure that that doesn't happen. So, all right. Well, ladies, thank you so much for your time today. I really appreciate it. I hope that everybody, thank you so much for joining us. We hope you found this information helpful. Of course, a copy of the slide deck and the recording will be available, I would say, within the next 1 to 2 business days. And then we will also have the SHRM CE credit for those of you who attended the live presentation today and are maintaining HR certificates. So thank you so much, everyone, for attending this afternoon. We appreciate your time and have a fantastic rest of your day.